This is the future of finance. This episode is made possible by Metis Global Partners. Hello, everybody. Welcome back to the Future of Finance podcast. I'm George Dyer, and today we have Mike Kubzansky on the show. Mike is the CEO of the Omidyar Network, which is a philanthropy that uses their investing, their grant making, and their intellectual capital to create a future where our shared humanity steers our digital future. Omidyar has been a supporter and a partner of our work around responsible AI at the Intentional Endowments Network. And they're doing a ton of great work to build the tools and ecosystems to help investors and businesses and policymakers think about how to minimize the risks around tech and AI. Mike shares a lot of practical advice in this conversation about how investors can get smart on these topics and work with their external managers and the companies that they invest in to reduce risk and ensure safety and build trust in AI. This is a great addition to our ongoing series around responsible AI and one you won't want to miss. So I hope you enjoy it and find it useful, whether you're an investor yourself or you're a student or a business leader or just a concerned citizen. Please let me know what you think. Leave a comment or review or find me on LinkedIn. And now here's Mike. Hey, Mike, how you doing?
Good, George. How are you?
I'm doing great. It's good to see you. Happy New Year. How are your holidays?
Holidays were great. I had a nice chance to unplug and relax and got a chance to take a short break to Mexico and check in on the warmer temperatures there.
Yeah, that's great. It is well below zero here north of Boston, so I'm envious of that. Do you guys shut down? You give the team a little bit of a break over the holidays?
We do, and it's magic because the joy is at that point the volume of email you have to come back to is so much less.
Yes. Yeah, exactly. We do the same thing, and it goes a long way. How big is the team now at Omidyar?
We're about 40, 45 people, depending on, we've got a couple of open roles, so kind of fluctuating kind of in there right now. But we're hiring in Sacramento, we're hiring in San Francisco, we're hiring in a bunch of places. So we're a little lower than we should be at the moment.
Yeah, that's a good sized team though. Everyone is kind of mostly Northern California, or do you have offices far and wide?
We split evenly, more or less, between Washington and San Francisco. We have a couple of people who, as a consequence of the pandemic, I'm sure you've seen this as well, who are in some kind of third location. Like we've got two people in LA, but for the most part, everybody is, either in San Francisco. Our COO is here in Washington.
Yeah. Gotcha. Nice. Well, tell us a little bit more for people who aren't familiar with the Omidyar Network, just kind of the basics about what you all do and how it came to be.
Yeah, of course. We've been around for a little over 20 years. We are the first initiative of PM and Pierre Omidyar. Pierre, of course, the D-Bay back in the late 90s and IPO'd in the early aughts. And at that point, committed to spend before there was such thing as a giving pledge, committed to spend his time and money on social impact, here on out. And that's effectively what they've done. So Omidyar Network, ON for short, is the longest standing of the family's entries, but we're one of about 10 different entities that the Omidyar group runs that addresses various issues in an attempt to generate social impact. And we operate with some sister entities who operate in the education space or the financial inclusion space or the democracy space. But our focus at ON at this point is how do we make sure that AI revolution made for everybody and not just a few people. And so really, the poetic version is bending the arc of the digital revolution in favor of broadly shared prosperity, power, and possibilities. The unpoetic version is, making sure that we have actually intentional societal governance so we can get the best across the wide swath of society from this technological revolution, the same way we've done in the past, whether it's from cars or biomedicine or other technological, innovations. And over the years, we've been in tech because we're from Silicon Valley, because we have Silicon Valley origins. We've been in tech both as nonprofit builders, building open source communities, as for-profit investors. We've invested about $750 million in either directly early stage startups or into funds. And in tech policy and advocacy, fighting good fights and it's sort of that we don't repeat the same mistakes that I think we all regret on social media.
Yeah. Well, I'm excited to dive into all of that, but it's, you all have been pretty early pioneers, I feel like, in the impact investing space and sort of using, I don't know if you call it impact investment, using those investments as well as just sort of the traditional nonprofit structures. Is that intentional
Yeah,
from the
that's right.
start? I mean, how did that come about?
That's right. Effectively, our origins were, and so we are structured different from your average philanthropy, which is we are both a limited liability company and a C3, both. And so everyone's on the same payroll, and their instructions are problem first, tool second. If the
Hmm.
way to solve the issue you're trying to solve is to make a grant, knock yourself out. That's great. The way is to write a loan guarantee, do that too. So it's really supposed to be very agnostic on what tool you use. There are implications in terms of how you set yourself up and that sort of thing. And the magic is you're not driven by the tax return, you're driven by the social impact. And so that's the real core insight in terms of how this kind of flexible
That
platform
structure,
approach.
yeah.
But yeah, I think to your initial question, I think you could read the first 15 years of our existence as making the world safe for impact investing by really trying
Yeah.
to popularize, expand the concept, both through field building grants and activities and through practice ourselves. So trying to walk the talk and show what's possible, share the lessons of that, and then also invest in all the field building activities like the Global Impact Investing Network or the Impact or a bunch of the players, who have evolved over time to um, really kind of carry the field building forward. And I to this day still sit on the board of the U.S. Impact Investing Alliance, for instance.
Oh, nice. Yeah. No, that's huge. We find it all the time in our work at the Intentional Endowments Network is how important it is to have those examples and peers that are actually doing it and putting into practice, especially in those early days when there's a lot of skepticism or uncertainty around what it was all about. Nice.
Yes, yeah, and it's nice. I remember we were present at the creation when J.P. Morgan first wrote the report back circa 2008 that impact
Hmm.
investing was going to be $1 trillion asset class, and everybody poo-pooed and said, "No way, never. This is like you know, this is a fantasy." And now the Gin reports it's well over $1 trillion. So
Hmm.
you know, there's a lot more work to be done on the impact investing front, but I do think it's gone from an interesting niche idea to a much more broad-based and accepted practice. Obviously, with some controversy still.
Yeah, no, absolutely. But I think, yeah, we sometimes lose sight of how much progress has been made around some of these things. Well, let's dive more into the AI work. And it's been great. We've been highlighting and kind of elevating these topics in partnership with you all to our network. Obviously, it's top of mind for everybody. And let's just start with like some of the issues because there are so many. It can be a little overwhelming when we
Mm-hmm.
think about, job loss, the threats to democracy, the energy and water use at data centers, all the social isolation impacts or, potential, kind of relationships with chatbots, all these things. So how do you sort of start to make sense of like that kind of myriad of social and environmental issues?
Yeah, I want to see you and raise you on your list. I have about 5 other things to add to your list, which I'll come back to in a second. But I want to
Hmm.
take it all the way back to this lens on because I spend a lot of time reading out on the history of other technological revolutions and how we handle them. Because that's you need to look to the past sometimes to kind of inform your approach to the present. And so I think the macro issue is, and this is fascinating in terms of how it shows up in the US, is trust. Right. And so I think we're going to talk a lot about the word trust today, but to say nobody buys a technology they don't trust. You wouldn't buy a refrigerator that didn't have a UL rating and that sort of thing, or you thought it was gonna blow up. You wouldn't buy a car if you thought the wheels would fall off. And so I think we're in an interesting time where the technology is being disruptive of social trust and cohesion, and the digital technologies have generally been doing that. I did some interesting new BU paper by some academics at BU talking about how AI is destroying institutions and trust in institutions. But I think the macro issue is nobody wants to buy or adopt a technology they don't trust. Now, over time, people have always been willing to invest in new technologies because that's the new thing.
Hmm.
But some of them have turned out great, and some of them never get adopted, as a consequence, or are very slow to get adopted until they're trusted. And you and I have talked a lot in the past about cars, for instance. But
Yeah.
adoption on cars went way up when the rest of the safety infrastructure was put in place, whether it's stoplights or DMVs or VIN numbers or tail lights or some of these sorts of things. Fatality rates go down and usage rate and purchase rates go up. So there's a lot of ways to think about trust, but I think AI, the big issue on AI that we all need to work on is how can we trust this technology and what assurances need to be in place. But right now, the Ailment Trust Barometer came out late last year, and there's just stunning statistics, which is to say 54% of people in China accept and are excited about AI, and 17% of Americans, right? So
Wow.
think about that. 50% according to Pew
Hmm.
say they're more concerned than excited about the increased use of AI in daily life, which is up from 37% in 2021. 77% of Americans are concerned about the effect of this technology on jobs. They are clearly approaching this skeptically. Nobody buys technology they don't trust. The vaccine issues in COVID, had a lot of other cross currents. But one of the legitimate issues that the vaccine skeptics raised is, gosh, this seems like it rushed through the FDA process, right?
Yeah,
Did the
absolutely. Yeah.
FDA really have time to consider it? So
Hmm.
Americans look to institutions to validate that these technologies are trustworthy.
Hmm.
And I think one of the things that hampered vaccine adoption was the fact that people didn't trust a process that looked to them rushed. Now, that for some people, that was pure air cover for a different position. But for some people, that was a genuinely well-founded skepticism and
Sure.
that sort of thing. So I think we have a macro issue in terms of what is it going to take to trust the technology to validate this level of investment and hurtling forward to this world that we're doing.
Hmm.
Because right now we know a lot of corporate buyers who don't trust it, and so they don't buy it. And so the investors are there, but the rest of the society is not. And I think they also look around at the other effects on things. So you listed a great set of things: job loss, misinformation, threats to democracy, et cetera.
Hmm.
I would also add, we don't have the pandemic proved we don't have an up to code safety net, right? Unemployment insurance basically broke in the pandemic. No one's fixed it. We have employment related health benefits architecture. There are issues of economic concentration. There's issues of real issues of a potential bubble. There is, this is being promoted by at least some billionaires who are actively on the record as being against democracy. and
Yeah.
and then importantly, it's something I think we'll discuss a lot more over the course of the podcast. There's a huge effect on the rest of the real economy that has not been really theorized or thought through terribly well so far.
Yeah. Well, on those issues, do you have a sense of like priority or a hierarchy of them in mind?
Yeah.
Or do you feel like, you mentioned job loss a couple times, and obviously that's a potential real systemic risk for all
Yeah.
the reasons you just mentioned. Is that number one on your list?
I would say it's top three for us in terms of and just think about it, right? Who's going to buy refrigerators if nobody has a job?
Hmm.
So, the American economy is 70% consumer spending. If consumers don't have incomes, like it is at its most cartoon simplified form, that's a big problem, as well as the social unrest that we've seen from legions of unemployed college educated folks, as well as legions of unemployed non-college educated folks. So, but again, I would say that taking one step back, right? AI is going to be one of the most profound forces shaping the economy, society, and capital markets over the next decade.
Hmm.
And so I would say the number one issue, again, is trust. How do we build a framework that we can trust it's going to do what they say it's going to do, that it's going to deliver the benefits, and that will channel it in a useful direction, that we are not just hurtling towards the next
Yeah.
debacle. But I would say, from a point of view of the audience who listens to this podcast, investors need to understand and address AI. So fulfill their fiduciary duties, full stop. So I think it's going to be one of these issues like electricity that's going to inflect everything else in society.
Hmm.
Like it's hard to imagine now society, including AI, without electricity. It's in almost everything except maybe the water sources. AI generally, I think, for this audience, is worth thinking about as significant as climate and moving faster. And
Yeah.
so then where do you start? It's going to inflect everything from energy prices to products to employment to technological advances. So I think if we had one place to start, and we'll come back to one sort of policy fix later, but if we had one place to start for investors, it would be the G part of ESG, right? That
Hmm.
because it's going to be so all-purpose governance, that's really going to matter, right? So how is there going to be competent governance? This should be every investor's first ask at this point. How are you governing AI? And then I think different investors will have different subtopics that should be more concerned to them than others. So I would imagine, for instance, so in addition to everybody should be asking about governance, full stop. I think that's got to be where.
Yeah. Because it's changing so quickly
Yeah,
too, right?
exactly. That's the only
You
future
need some
proofing you can do is
principles.
have competent which we can keep up.
Right.
But that being said, there will be subsets of investors. University endowments should obviously also be tracking the implications for higher education, which are going to be huge, right? For science and research, which is the enterprise that funds a lot of these universities. A labor pension fund, though, is probably going to also pay attention and should pay attention to the jobs and displacement issues in terms of both their current members and their past members. Whereas an insurance company investor might want to focus more on the sort of the wildfire risk from an overtaxed grid, that sort of thing. So I think they're going to be investor specific things that will be add-ons, but I think everybody, the future proofing of this would be to focus on the governance.
Yeah. So have everyone focus on that governance, and then, there's sort of more specific issues that might relate to a specific investor or priority area. Yeah.
That's in terms of their internal work. Obviously, in the broader kind of environment of what you do about this, the first thing I would also encourage investors to think about is liability, right? Which is as we've talked about in the past, like we have set liability regimes for everything, every other technology in the past. If the electricity transformer that the utility is running blows, it's on them. Like if they actually spark a wildfire, it's on them. And one of the things we've never done in the digital era is get around to building a liability framework. In fact, the only liability framework is one that explicitly absents major tech companies from any liability. It's Section 230 in the social media realm. And so, this is the most risk for investors that's out there, which is to say you're at the mercy of a judge who may or may not be tech literate. You're at the mercy of a given individual state legislature to kind of set up a framework and that sort of thing. And so from an investment point of view, the thing we would most need to be advocating for is a clear, cogent, sensible liability framework. And this is going to get tested quickly, right? There are 7 lawsuits against OpenAI about kids' harms and even suicides. OpenAI has indicated from the last thing, I might be out of date on this, but OpenAI has indicated they're going to use a Section 230 defense. Like, it's not our fault. Like, we didn't say that to them, the bot there. It's not,
Right.
It would be far better to have our policy or get paid to make these trade-offs and that sort of thing, set that framework. And we are investors in Anthropic ourselves, and the judge ruled in favor of Anthropic's right to fair use of all the data they used to train their model. But that was one judge's ruling, and another judge could rule differently. And if Anthropic had to go back and pay for all the data, or OpenAI had to go back and pay for all the data that they took under fair use principles, that would be a material event financially, for the the company, let's just say.
Yeah. I mean, so you've got these sort of like company specific risks, which seem like they are mostly around litigation at this stage, would you say? Kind of aside as or in contrast to the systemic risks around like widespread job loss would affect, as you said, the whole economy. There's no one to drive the consumer economy. But I mean, investors, kind of have to think about both right now, right? In terms of like, if you're looking at this one company, what's their
unfortunately,
exposure?
that would be my counsel. Exactly. That there's specific company level risk that might be, that'll differ if you're like a medical company that's using AI for diagnostics than if you're an education company using AI for teaching versus a financial services company for mortgage loan applications and that sort of thing. So there'll be some idiosyncratic, or not idiosyncratic, but some company specific kinds of considerations, as well as in the AI stack itself, like the Anthropics or the NVIDIAs and that sort of things. Like NVIDIA sits on a bunch of geopolitical risk for reasons that don't need to be gone into here. But then, I think there are 3 kind of systemic risk issues that I would counsel investors. I'm going to revise. I want to nominate 3 to 5 systemic issues that I think investors should be paying attention to, and we can talk about how they could cut in on this. But one, AI actually has a PR problem, as we discussed. AI itself has a PR problem. Nobody trusts it. And so I think the first place to start, obviously a macro risk is Americans are hearing promises from AI leaders about the great innovations they're going to see. So far, the innovations have been kind of interesting, but not earth-shaking yet, right? We have not found new proteins. We have not found that sort of thing. They may be coming. I hope they're coming. That's why we're investing. So Americans look at the promise of job loss. They're increasing energy bills that are coming up with the data centers and the concentration of wealth and decision-making in these powerful AI companies and AI execs. And that's going to really frame it. So I think there's a set of macro political risks this year, right? But I talked to a bunch of people in Congress in the late stages of the campaign in 24, and I asked Are any of you hearing from your constituencies about AI? Crickets, nothing.
Hmm.
This year, not so. The
Right.
issue is going to be front and center in gubernatorial campaigns, state legislative campaigns, national campaigns, Senate campaigns. And it's going to be particularly around energy and jobs, right? That has landed for the American people.
Yeah.
There is a legit possibility, and there's some strange politics emerging around this, which is to say you've got the accelerationists primarily represented by the folks in the Trump administration and their supporters in Congress. But what you're starting to see on the left and the MAGA right is an anti-AI populist lane starting to form with folks like Bernie Sanders and Josh Hawley. Like, if you want to blow your mind, read Josh Hawley's speech to the CPAC last year. He literally said, "Over my dead body, will we ever substitute AI for a driving or trucking job?" Right. In terms of like really, really very fiery things. And Marjorie Taylor Greene's the same. She said, famously, "I would never have voted for the bill if I had known this AI preemption piece was a part of it." And so it's going to be interesting to see. So I think there's a political risk to this as well now. If you're a macro investor, you need to just see how the politics on this is going to play out, because you've got the Bannon wing of the Republican Party joining with the AOC wing of the Democratic Party to form a different kind of coalition on this. And we'll see how much traction that movement gets.
Mm-hmm.
I think another area to pay attention to, where I think there will be traction at the macro level, is kids' online safety. And again, to the splitting of the Republican coalition, you have governors like DeSantis, Sarah Huckabee Sanders, Bill Lee in Tennessee, right? Not just J.B. Pritzker and Gavin Newsom, right? And by the way, Jennifer Newsom is Jennifer is the first lady of California, her first partner, tremendous advocate on kids' online safety, that sort of thing. That's kind of what you would expect from, the Newsom pick, but not what you would expect from Sarah Huckabee Sanders, right? And so I think there's emerging consensus to leave the states to regulate, and particularly how this affects kids, chatbots and interactions. And by the way, so anyone who is investing in ed tech, this sort of thing, this is where school districts and governors are going to start paying attention. They already are. And so I think a place to watch for action this year will be at the macro level. That's the place I would see as likely. But then the other thing is, of course, an economic issue, which investors need to first and foremost pay real attention to. Where's the ROI on the massive investment going to come from? Over $1 trillion, just in Q4 last year, $1 trillion are committed to data centers. And it's not clear how they're going to generate sufficient ROI at current adoption rates, which are low, particularly among corporate buyers. AI revenue broadly, I did a quick check before this podcast broadly across OpenAI, Anthropic, Gemini, the major players. Ballpark, the revenue for these hyperscalers, not including cloud services, but for the actual AI services, is about $50 billion if you want to be generous about it right now. And it's growing super fast, right? So the CAGR is huge. But $50 billion even if you add a zero, $500 billion to justify $1 trillion of investments in fixed assets, the equation doesn't clear. So, and depreciation is going to start to outpace all of this. Right? Going to start to profits and everything. And so I think there's another risk that investors need to be careful of, which is to say, not necessarily, there's a whole cottage industry on when's the bubble going to burst and that sort of thing. But even right now, we have the amount of CapEx being deployed is so outstripping the level of take-up, the level of usage, and what's been promised. And, and by the way, this is a characteristic of all technological revolutions. We overbuild capacity at the outset, so it's not surprising. But investors need to be paying attention to that, because that is a huge macro risk to the economy, that we have all of these stranded assets potentially that are not generating enough revenue, and there could be a massive kind of shakeout, if adoption doesn't pick up. And adoption, of course, George, comes back to trust, right? So this is why I'm so fixated on trust.
Yeah, well, it's such a fascinating dynamic, because there's been this kind of gold rush and hype and boom and everything, and it is, as you say, kind of natural pattern for a lot of new technologies like this, but it does seem accelerated and quick. And I guess, that's one thing, like, is it a bubble? When will it burst, if so? And I think investors have to kind of just navigate that for themselves. But back to this trust issue, you've used the analogy before, as you mentioned, like the car industry and how it took time to establish those rules and safety measures that gave people trust. And that, how should investors be thinking about that in the meantime? Because there is
Yeah.
still this fear of missing out. This is the next big thing. That the potential is
Yeah.
huge. I don't think anybody denies that. And so investors, I think, want to get in, but it's going to take
I
time
don't
to,
envy any of these allocators because the pressure for alpha from this is so tremendous and the
yeah.
potential for harm from this is so tremendous. They are really
Mm-hmm.
sitting on a knife's edge.
Yeah. So what do you think they should be, particularly for the asset owners, the allocators, who are usually allocating to external managers who are then, investing in the companies? I know from what we've heard is a lot of them are starting to have conversations with their managers, but it's fairly high level, like, getting a sense of how they're thinking about it. What is your thought on if they should be doing more, or there should be specific asks of their managers that they should be pushing for, or at this
Yes.
stage?
Yes, we think so. And I do want to come back. I know I want to come back to the jobs thing in particular because that also has an economic consequence, obviously, back to the who's going to buy refrigerators. But
Mhm.
yeah, so I would say a couple of things here in terms of what investors can and should be doing, right? So broadly, I would say kind of 5 things to prepare now, in addition to kind of get smart on and making their own bets as to what, if anything, the asset bubble is going to be. And I, by the way, participate in the asset bubble in Web 1.0. I work for a startup that overbuilt fiber optic cable, so I have my strong own personal war stories and
Right.
earned points of view on this sort of thing. I think we're still working off the dark fiber that we built back in 2000.
Yeah.
So I have my own very up close perspective on this in a different context, of course. But so one, I think, as we would suggest for asset owners, kind of fight one, be intentional. Like, just treat this as another kind of passing thing. This is going to inflect everything in the economy, and they need to run a serious process internally around it.
Mhm.
And secondly, exactly as you said, incorporate AI into their engagement with managers. Even the process of asking is a signal that it's being taken seriously. And we've seen from others that this actually, in and of itself, just signaling that this is important to the upstream allocators and owners is useful. So asking questions, what frameworks are you using? How are you thinking about it? How are you using AI in-house in your own operations, manager X or manager Y? That's a starting point. We can, and I'll come back to, I'm sure the audience would be interested in what to ask them about as well. I have some ideas on that too. So, but let
Mhm.
me start at this level first. I think third, trying to ensure that AI is incorporated into the engagement with the underlying companies, that the managers are also asking their companies the same thing. So asking them about what's their process for engaging with their holdings. And
Yep.
again, as we've talked about in the past, totally different if you're engaging with Microsoft, who's a big publicly traded entity with a massive capability for engaging with investors, than a startup who's got six kids and some compute. Right,
Right.
that sort of thing. They're all just different stages. So it needs to be tailored for the asset class you're dealing with, obviously.
Mhm.
Fourth, and a really interesting idea that we're starting to explore here at ON is, I think there's a parallel to the bond market here, which is nobody would buy a bond without a Moody's or a Fitch's rating, right? And so, and they build portfolios on, we will not buy less than AAA rated, we will not buy less than B plus rated, or that sort of thing. I think there's a market for demanding third-party ratings. Again, we don't want these folks that grade their own homework. And one of the key pieces of setting up proper governance of AI field is setting up that third-party auditing capability the same way. None of us would ever take a Microsoft set of financials without knowing that PwC or whoever signed off on it. So
Mhm.
I think there's an interesting role for demanding. The investor shouldn't be in the position of producing the ratings, but demanding some kind of independent third-party rating of
Yeah.
the products
Interesting.
and the technologies that are using it. So if you are a school board in Iowa, you're not a sophisticated buyer, but you're going to want to buy ed tech. And you might want to just say, yeah, our policy is to not buy anything that's rated less than double A minus or something like that.
Mhm.
And those ratings could be on everything from privacy to energy usage to fill in the blank.
Right.
So I think there's a role to create some demand here
Hmm.
that investors could play, and would love to be in partnership, by the way, with IEN about that, if IEN has some interest in that.
Yeah.
And then obviously, fifth, and most of your members have already done this, which is great by definition, in joining in investor engagement initiatives like World Benchmarking Alliance, like IEN, like Project Alexandria, which we're standing up as a way quite smart on this, and
Mhm.
compare notes across themselves, right? Which is to say, investors are very unique entities. What works for an auto body shop is not going to work for investors. So they should be talking to their peers.
Yeah.
Then I can say underneath that, there's a lot of frameworks that are starting to be developed, right? So People AI, what I talked about in the past, is a nonprofit that works with public companies and their boards. And Miriam Vogel, who's the principal at Equal AI, just came out with a book. They have a badging program for public companies. This gets a little bit like external range. And if you go to her book, she's got 5 main categories in terms of what they're asking the companies to do. Where are their principles, policies, and standards? What's the accountability structure? What are the teams and the training that they're using to the people in their own governance inside the company, inside a publicly traded company? What's their own AI inventory? What are their checkpoints and their own assessment processes for doing this? Where are their governance controls in-house over both the technology and the decision-taking to deploy and the effects? And then what AI governance platforms and tools, technical tools, are they using themselves as checks, and it could be anything from cybersecurity to lock it up because it's trading on very personal data that they don't want leaking back out into the OpenAI servers, or auditing capabilities or other technical capabilities. So I think she's laid out a nice kind of starting framework. I don't know if we do footnotes on sources at the end of the podcast, but I would include her book as one of them.
And that's Governing the Machine. Is that?
Yeah,
I think
exactly.
of the right book. Yeah.
Yeah.
Yeah. And that is a great, concise framework, I think, for the government. Just getting to what governance means in terms of like when you engage with companies. That's a bunch of specific asks. Yeah.
So she's laid out a good, at least for public companies. Again, for an early stage startup, the kind of we're used to dealing with, they're not remotely equipped to deal with this. But at some point, when you get to the B round, for instance, I do think it is appropriate for the venture investors at the B or certainly the C round to say, for the relevant startups, is there a trust and safety team? Right. And why is there not a trust and safety team? Right. And that sort of thing. So I think the questions are very different, but by segment, you would ask Microsoft or AT&T something quite different than you would ask startup XYZ. And then obviously work on the boards. Where is the competency on the board? Who is the board member who is assigned to understand this and bird dog this, right? Very important, back to the sort of universal one-size-fits-all solution of better governance. And then I think the other thing that we as investors want to ask, all right, what data are you collecting that because what gets measured based on? And if they're not collecting data on this, well, they're never going to be in a place to govern it well. So that would be kind of our sort of opening gambit, both at the sort of the macro level, and then we can get into and teams are starting to develop more toolkits, which we've talked about in the past. That the partnership with AI is working on some toolkits that family offices can use, and so the good news is there's going to be a lot more toolkits to choose from, and I'm actually later on I'll talk about some of the upstream investors who have built their own toolkits as well.
Yeah, no, it's been great to see more of those coming for sure. And I think, it's interesting, you alluded to the differences between the startups and the big companies. I was talking to Gaurav Bansal from Responsible Innovation Labs yesterday, and he'll be.
I have a shout out coming later in the podcast to him.
Oh, good. Well, we've got an episode with him that should probably be coming out before this one. But
good.
Yeah, it was interesting. And I think just talk a little bit about that dynamic of getting this embedded.
Yeah, we wrote them their
early.
Second grant check. Yeah.
Nice. But it's about the importance of getting that embedded early. We're talking about how, like, when it's a startup, you got a founder or two. You don't, like you said, you don't have these teams or policies or boards even. It's got to be kind of embedded in that culture from the start, and how much easier it is when that, is in the corporate culture from the start.
Yeah. And founders have to focus on product market fit and how to make money.
Yeah. What about like the technical expertise? We talk about having that expertise at the board level or the C-suite and also for investors, like how much technical expertise do they need to ask these questions? And is there going to be sort of a shortage of people who can really govern these risks effectively for all these companies that are going to be using AI?
There's going to be a shortage, but so I would say investors obviously need to ramp up on this issue. And by the way, one of our goals at ON and at Alexandria is to help educate the investors and they construct. That's one of the points of the Alexandria platform, is to make investors smart consumers of this as the ultimate people who are funding this revolution. So how do you bring in expertise from the AI and responsible AI worlds to investors? So I do think there's a strong role to be played on investor education, and we're gearing up work on that. And I do the work you do as well, and part of that process, and happily so. In general, I
Yeah.
would say, though, investors and allocators don't need to be nearly as technically smart on the issue as Eric Schmidt would have them believe,
Hmm.
which is to say, the tech community has an actual economic interest in wanting you to believe certain things, the inevitability of it, the complexity of it, and all the great things that may or may not happen. So if someone from tech is telling you it's too complicated for you to understand, that is motivated reasoning as far as I'm concerned. And again, as we talked about before, your members sit on a knife edge, have to make complicated decisions, judgments about the economy, society all the time. There's no reason anybody who's schooled on that can't figure this stuff out too. So just to say, there is going to be some expertise required, but not necessarily as technical. I would say the place where I would advise investors and allocators to pay attention is less on the technical. I mean, there should be an AI 101 to kind of understand the basics of what it works and what's the difference between machine learning and generative AI and that sort of thing.
Hmm.
But really, I think the key is to understand the economics of it, right? I think being as economically and historically literate as technologically literate, yeah, you should understand the AI stack itself, but there's a YouTube for that. And then other dimensions, which we're hoping that Alexandria is going to focus on, then there's going to be big dimensions, like we're told we shouldn't regulate this because if we do, China wins, right?
Right.
I'm sure all of these allocators have exposure to China, that sort of thing. So, getting smart on what this means on geopolitics and what China is up to, I would say is just as important as understanding, how how a prompt works, and this kind of pattern, language replication capability.
Yeah.
I think some technical knowledge is needed, but not nearly as much as what people want you to believe.
This episode is made possible by Metis Global Partners. A global equity solutions provider managing over $5 billion, Metis offers both active and customized beta strategies for institutional investors. Through their guided beta product suite, Metis provides custom passive equity solutions to clients desiring sustainably aligned equity and real asset portfolios combined with a high-touch partnership. Founded in 2013 in San Diego, California, Metis serves a wide range of institutional clients including foundations, endowments, nonprofit, university, public plan, corporate, and family office clients. To learn more, visit www.metisgp.com. That's metisgp.com, or email info@metisgp.com. Yeah, no, it makes sense. On the kind of China race piece, I mean, I heard a really interesting reflection recently that a similar argument was made around social media and, sort of earlier tech developments where they're saying you can't regulate us because we'll lose the race with China. And we won the race. And we now look at all of the unregulated social media and the impact that it's having in our society. And it makes us wonder, what did we really win here if all of our,
and by the way, did we win the race? Because
being...
TikTok is killing its competitors.
Right.
So
Well,
I'm not
exactly.
even sure
In the
we
long
won the
term,
race.
in the long term, maybe there was that sort of slow and steady approach isn't always the worst. On the policy piece,
and now we have unregulated TikTok competing against unregulated, say, X and unregulated Instagram, taking a lot of Americans' personal data with them. Right.
Yeah.
And so if we had a better regulatory framework, we wouldn't have this whole kerfuffle over TikTok.
Yeah, absolutely. On the policy piece for AI, though, what role do you see investors playing in that process? Because when we talk to them, we often hear, okay, we know all these risks are out there. We don't want to miss out on the opportunity. It would be great if there was good regulation, but it's not our job, to go out and lobby for smart regulation on this. We're busy with our day jobs. So how do you recommend that they sort of engage in that conversation?
Yeah, later on, I'm going to push back against that a little bit. But so first of all, Alexandria is our bet that we think policymakers need to hear more from investors, those who are comfortable. Obviously, some investors have a mandate, but there are plenty of investors, particularly, family offices, high net worths, others, who actually can use their voices, and even some, endowments and that sort of thing. Obviously, they need to be careful about not giving counsel to anybody to create law, particularly if you're a university or a foundation, you're a C3, like there are very specific rules about what you can advocate for and lobby policy. So, but that being said, I do think we need I know from my conversation with policymakers, at least federally and certainly at the state level, they never hear from investors on this stuff, right? And so I think it's a missing voice. They would like to hear from investors, in fact. Some players are going to be better positioned to do this. State pension funds already have political leadership, so they're going to be well placed if Mike Frericks or Eric Russell or Brooke Learman, wanted to advocate for anything. Of course, they could. They're elected politicians. So I think union pension funds can and do and are active. AFL-CIO has already been quite active.
Mm-hmm.
Insurance companies, we're going to be underwriting all this risk. Ought to be speaking up as well on behalf of their holdings and their day jobs. And philanthropies and their endowments can't lobby or risk their see-through status, but they can be more activists as investors.
Mm-hmm.
And I think as investors, like one of the questions they can ask is of their holdings, what are you doing to build a safe world and that set of things, right? Google alone, Alphabet alone, has 80 paid federal lobbyists. Right? They have in-house, they have 54 former Department of Justice lawyers on their payroll to just manage that sort of thing. So I bet most of the allocators have some exposure to Alphabet. Is anyone asking them about their lobbying work, and are they actually lobbying for the public interest
Yeah.
or that sort of thing? So that's the kind of thing endowment managers could do if they can't get up onto Capitol Hill. And so, those who can speak up, we are trying to help mobilize those voices, those who can and want to speak up, because right now, the investors most people hear from are Larry Fink, Mark Andreessen, and Bill Ackman. And so there's a very lopsided playing field, and I don't think they reflect the interests of all investors in their full complexity.
Yeah, absolutely. You've mentioned Alexandria a couple times. Just tell folks what that is and it's kind of the outline of what you're planning with that project.
Yeah. So Alexandria coming to 2026 near you. We are standing up a platform that will be a small venture fund to invest and be current on what's going on in the space itself, what's at the cutting edge, and how do you build a trustworthy AI stack itself. But the more interesting thing, I mean, so the numbers is a place where upstream investors can get together, get smart on AI policy, get insights that they can't get anywhere that are relevant to them, insights, and help mobilize their voices on these kind of policy issues, as well as be a channel and a source to provide not just insights, but actual frameworks. So to be a channel for all this other good activity that's starting to percolate in the space, to share those reference points and those frameworks to help inform practice and trade their own notes, because everybody's in such a unique, situation. These are the, other players in the economy. So that should be getting set up late Q2. We are eager to partner with IEN and a number of other friends in the investor facing, orbit on this. And we think it could be we are hopeful that it will play a useful role in helping investors get both courage and knowledge and toolkits to help them manage through this.
Yeah, we're looking forward to it too. I mean, we're definitely hearing that desire, I think, for people to understand what others are doing, because a lot of people are wrestling with the same things.
Yeah. And one of the things we want to do is share with them, like, hey, you have some peers who are already active on this. You can learn from them as well, right? So the Union Pension Fund has done a lot on AI shareholder resolutions, which had not particularly gone anywhere, but they've started to become active. Railpen in the UK has developed an actual published an AI governance framework. I hope that we can link to their governance framework in the bottom of the post.
Definitely.
But they have a very interesting framework with 4 key pillars around governance, strategy, risk management, performance reporting. And again, the UK is in a different political environment. They also actively talk about needing to engage with policymakers, right, and that sort of thing. So there are starting to be some CalSTRS and San Francisco Employee Retirement System are incorporating AI into their stewardship and corporate governance strategies. And we've seen a number of VC firms moving into the space. I just talked to another one this morning who were trying to do the right thing, in this. And so some of the people to whom your members are allocating are starting to break some new ground here as well. So the idea in Alexandria is a place where people can share notes and what they've got going on, and take which bits of the toolkit matter and are germane to their work, and bring that back with them, and be able to, I know there's a lot of interest in kind of pure legitimacy, to be able to not have to go first necessarily, to be able to figure out who's gone first, what their lessons have been, and that this is a well-considered approach.
Absolutely. Yeah. I mean, I think those peer examples, best practice examples are always really helpful. So will there definitely be more to come on all of that, and we're looking forward to to working with you on it as it really gets going. Tell us a little bit about some of the other groups. You mentioned a couple like World Benchmarking Alliance, and we were working with us, but what are some of the other partners that have been key in kind of getting this info out to different investor groups?
Yeah. And so let me get into the why we're working with these groups, and then I'll get to which ones, right? So basically we have 5 objectives for why we work with you and others in terms of raising awareness and educating investors. So we work with you, we work with RK Compass and several others. I think they just rebranded as Robert and Ethel Kennedy Compass, but that's the same group. How do you build the business case and the tools for investor action? So, building out the research that demonstrates that responsible AI practice is as profitable as irresponsible AI practice. Supporting platforms that bring investors together for peer learning, as we just talked about, like yours. Hopefully, one of the goals is to actually trigger investment into the more responsible parts in the AI sector as well, to consider alongside the other chasing APA that people have to do. And then obviously engaging on policy, equipping investors to engage on policy. So the groups we work with are in service of one or more of those 5 objectives. We have been working with World Benchmarking Alliance, UNPRI are active on this. Obviously, Robert and Ethel Kennedy Compass Partnership on AI is doing a lot of work as it applies to family offices. ICCR and the Investor Alliance on Human Rights are also groups that are starting to think about this. So I'm sure you and your members know most of these folks quite well. And then there's some kind of orthogonal bets that we've been making, like working with Miriam, who's building out the framework, or working with anyone in venture knows the name Eric Ries, who famously wrote the book Being Startup, also started the Long-Term Stock Exchange. Like, he's one of the leading thinkers. He's got a book coming out. He's one of the leading thinkers on what is the right multi-stakeholder governance framework, for the AI era and that sort of thing. So working with folks, we're excited to get Eric's book tour out and going later this year.
Nice. Yeah. Well, it's a great emerging ecosystem for sure. And it's exciting to be part of it because it is, cutting edge of what's happening in our time. You alluded to there briefly kind of the investing in some of the AI safety products or companies that are kind of looking to address and help make AI safer. Talk a little bit about what that looks like. What are some examples of that?
Yeah. And here, another report I'd love to link to, if we haven't shared it with you already, is the AI Assurance Tech report that we co-sponsored back in 2024, which kind of laid out the sector for the AI Assurance Tech sector, which is specifically the software, hardware, and services that enable organizations to be effective, efficient, and precise on this risk mitigation around the AI. So, and by the way, the marketed that they assessed, they suggest is a $270 billion market. This is the same way that seatbelts are a $20 billion market. And so I think the right analog here is the seatbelts and the catalytic converters of the AI revolution. Things that are going to need to be commercially provided. But this is a bigger thing. Like, this should actually include the equivalent of Big Four accounting, right? Because one of the services that's going to be needed is auditing, or you don't want people checking your own homework on some of this stuff. So this is everything from cybersecurity for data centers or AI installations inside a corporate company, to deepfake detection, data privacy protections, and data anonymization sets of things. Data compensation engines, which is kind of an interesting frontier. People, how you compensate particularly creatives, which means you don't have to worry about the ill-gotten data training, liability. Model transparency and evaluation is going to be a big deal because it's not just going to be evaluating the LLMs, but it's going to be evaluating, take a big institutional bank or something, B of A deploys it, right? They're going to have any number of models of their own, built and trained on their own data. They're going to have to be, certified as not leaking and, trustworthy and that sort of thing for their guys to use it. So we have an investment in a small startup that came out of YC called Agent Hub, which certifies that the agent works for you and not for Mark Benioff, for instance. So the auditing sector, both for auditing models and auditing claims about models and that sort of thing, we're looking at a startup out of France that does prompt injection and tests all the models on how many prompts does it take to make them go rogue,
Right.
which should be part of anyone's buyer criteria. If you're a corporate user of this kind of thing, and he, I'm happy as an Anthropic shareholder to learn that Anthropic needed the most prompts to go rogue, but hallelujah, someone's doing that testing, right? Instead of just kind of leaving it out to the marketplace in the wild, right? And that sort of thing. So that ought to be a service. So as you said, this is a new market we think it's an investable category. We think it's a good place for this category of investors to think about. This, some of this stuff is going to look a lot like the old impact investing equation. Deep fake detection, unfortunately, is going to look like impact investing. The more it scales, the better it is for society.
Right.
It's also a depressing thought that you would need to scale deepfake detection, but it's absolutely coming, right?
Yeah.
And that sort of thing. So some of that stuff I think is going to be sadly quite profitable.
I was going to say, but since we do, it is necessary, and some
Yeah.
good opportunities
And
there.
it's going to be the required piece of the ecosystem that cannot and shouldn't be built by the government, right? This is these are we don't look to the government to build seatbelts. Why should we look to the government to build this sort of thing? And so, but there's an overlay that would make all this stuff more powerful, which would be some government mandates around some of the basic things that have been passed in the new laws in New York and California, for instance, will strengthen the need for some of this assurance technology. But again, back to trust, like, how do you instill trust? One way is having a decent, sane, stable, clear regulatory framework, and what's in, what's out, what is the state paying attention to? And another is through this sort of thing. Like this ultimately makes the stack much more trustworthy. If you know that it's been vetted by a third party, you know that the cybersecurity on the data centers is locked up and can't be hacked by rogue nations and that sort of thing.
Yeah, it's kind of a market-driven trust mechanism. Yep. Yeah, nice. Well, that's
a place where I think investors can really play a strong role. Right?
Yeah, absolutely. That makes sense.
Without waiting for the state and not having to go lobby any single legislator.
Right. Well, the time has flown by. I got a few kind of last quick questions before we get there. Anything we missed kind of on the big picture that you want to make sure we get in here?
No, I'd say, there's a lot more to go on the, on some of the systemic issues, which we'd be happy to talk about in the future. We talk about a couple of them like China. I do think something to pay attention to is the competitive dynamic, right? You don't have a technology problem, we have a competition problem that can lead to a race to the bottom. So in how do investors think about managing that? And then the job, we have a lot of thoughts on what to do on the jobs. That's the one piece we didn't get to talk about. Let me know if you want to cut a separate recording just on that. But
let's talk about it a little bit because it is so big.
Yeah.
I mean, I would love to hear if you have thoughts on some of the solutions, like in terms of universal basic income, or you had mentioned data for creators, but I've also heard schemes of like the idea of paying people for their data because it's going into all these profitable things, and that's a way to kind of compensate job loss that might be coming. What do you think about kind of some of those frameworks? Is that the direction we're heading?
We were early on the UBI train, circa 2016, 2017. And we, and UBI cash payments, as we saw in the pandemic, are good social policy, full stop. We should be doing more with direct cash payments altogether. But it's not the answer here, right? Or put it this way, it can't solely be the answer. And I think too many of our friends in the Valley in particular run this out as solely the answer. And one, it's not affordable. Two, it misses the entire psychological and purpose considerations around having a job that is provided, and the identity issues and that sort of thing, which are real and very, very meaningful.
Absolutely.
So it should be a piece of the equation, but not it. By the way, us also separately, we need to massively update the unemployment insurance framework and system that broke in the pandemic, and we never fixed it. The other issue to think about is that normally it's like, well, we'll create new jobs in these new fields, and that's true. We're not going to get there simply by starting up more. Either that, or we need to have 4 times as many startups and really ramp up the dynamism of the startup economy. But so I think as we thought about the jobs thing, there's some non-structural solutions like the safety net. Was obviously a lot of attention back. But then I think there's some structural things. The same thing, if you think about the analogy around electricity and how it showed up in factories, took a long time. What's an AI native job look like, right? In something like, if you listen to Tyler Cowen, he will tell you that 10 years from now, when AI has improved longevity and that sort of thing, we're going to be much more medical and care economy, right? That's stuff that just can't be automated. Like robots can't even tie shoes, let alone do really super complex, care things like helping an elderly infirm person shower or something like that. So I think people are mistakenly focused on the LLM makers themselves as the source of where this is going to come from. Now, undoubtedly, there's one version of this where all the profits do accrue to Sam and Dario and Sundar. But there's another version of this where the people who are actually benefiting are the companies themselves who are deploying the AIs to substitute for jobs, right? And so they're going to get savings from automation. And the question is, what happens to those savings? Do those all go to shareholder buybacks, or could those go into a dividend pool, for workers or for society writ large? And then the other aspect is exactly the one you referred to, which is the data these models are all trained on was built in the commons. We used to have commons of everything from grazing to knowledge, right? There was oral knowledge traditions in communities back, thousands of years, have now been effectively privatized and monetized. So I do think there is something to that argument about things that used to be public knowledge and held in community should be compensated back to the people who developed it. And so there's a potential. And in that case, that is the first one in terms of automation savings would be aimed at the customers of the AIs. The second would be aimed at the AI makers themselves.
Nice. Yeah, a lot of interesting things, and creative solutions that I think we need to explore. And really appreciate your time and sharing all your work, and just great thinking on all of this with us. So I got a few kind of final quick questions we like to ask. Maybe you already alluded to this one, but if investors were going to take one quick early first step around responsible AI, what would it be?
Ask your holdings questions. Start signaling to them that you care and this is material to you.
Yeah, just bring it up, right?
Yeah.
Get it on the radar.
Yeah.
Nice.
And I would argue, obviously this is our perspective. Everyone needs their own perspective on it, but I think the trust is the right lens to use. So perhaps through that lens, but just say the very act of asking questions is tell your holding to care, and there's more coming while you develop out the rest of the capability. So I would just say that's step one, obviously. Yeah.
Yeah. How about a book, a podcast, or some sort of resource that you'd highly recommend for people interested in these
this
topics?
Is the Ezra part of this. This is what I love. So a podcast that I think is great is Bloomberg's Oddlots. I don't know if you're familiar with, but they cover everything from supply chain disruptions to is the AI data center a bubble kind of thing. And they get unusual suspects that, like most podcasts, they get really people who are already famous in their domain. These guys have a knack for finding really unusual guests whom you've never heard of, who have really orthogonal perspectives. So Tracy and Joe do a great job. Highly recommend it. We had several of our former reporters in residence who also have podcasts. Like Tech Policy Press is one of our grantees. They have a nice weekly podcast just on what's happening on tech policy side of things. Obviously, I strongly recommend the IEN podcast. I think that's an excellent podcast. There's a couple of Substacks that we also pay attention to. Garrison Lovely, who has covered the OpenAI conversion extremely well. Jasmine Sun, who really has great offerings on the Silicon Valley tech culture and what's going on there in a deeper way. Jacob Ward, who used to be NBC News, has a Substack that's quite interesting on this tech stuff. And then two books I would highly commend. I'm sure this one I've already commended your audience. Asimov and Johnson, who won the Nobel Prize at MIT, wrote a great book about technological progress and how we have historically distributed the gains from that technological process, and how uneven that's been, and the lays out the path forward where it could be very extractive or it could be very inclusive. And so that's a great read and it's not in economist speak. Every average mortal can read it, which is terrific.
What was the title of that one?
It's called Power and Progress, but it's written in layperson's terms. You don't need to be an economist to understand it. And then there's an obscure Venezuelan economist, economic historian in Subbase named Carlota Perez, who, back to my prompt about getting smart on technological revolutions, most of what I know about technological revolutions I learned from her. She wrote a book in 2000 with a unified field theory. She tracks not just the technological revolutions, but the financial cycles that made them possible. So what has been the investment landscape, the returns, all of this sort of thing. And her novel contention is that every technological revolution has been accompanied by a accompanying financial revolution. So if you go to cars, the financial revolution was actually consumer finance, consumer loans for cars. With railroads, it was the joint stock company, right?
Mm-hmm.
And so
Yeah,
it's
interesting.
a really good big picture read. It's universal field theory of every major technological revolution. All these universal field theories often tend to gloss over inconvenient details, but as a provocation or as a way to think about how these things unfold and how society responds, it's one of the best, and particularly for investors.
Yeah, that sounds great. Nice. All right, how about on a personal level when you're not doing all this work? What do you like to do?
Well, I have a big goofball golden retriever who needs to get walked a lot, so I spent a lot of
Nice.
time walking. In the pandemic, I made a goal that I would get 10,000 steps a day, and so far, 6 years in, that has been consistent, and that is aided probably by having a golden retriever who wants and needs exercise and
They'll
is
do that.
desperate
One
to
of
be
mine just
social.
busted open the door, coming,
Yeah, there you
getting
go.
ready for
Exactly.
that walk.
So
Yeah.
I would say walking the dog. I do a lot of photography. It kind of keeps me sane and grounded in something creative.
Oh, cool.
And then we were fortunate enough to have a sort of a getaway place in South Carolina, which is on a very beautiful marsh, and the wildlife and bird life, and the river life, in sort of the low country in South Carolina is a source of joy. And, being in nature, particularly in this sort of hectic decade,
Yeah.
there's no substitute for getting out into nature.
Getting away
So
from the
I try to get
screens.
out there as often as I can. I went to Great Smoky Mountain National Park 3 times last year.
Nice.
Yeah.
Awesome. I love it. All right. And our final two questions we ask everybody: what's your vision for the future of finance?
This I have a one-liner for. I think that all stakeholders are treated as well as the financial stakeholders.
Yeah, that sums it up. I love it.
Yeah.
And how about advice you'd give to college students or young people interested in, either in this sort of sustainable impact investing sector or this whole responsible AI tech sector?
Yeah, 2 things I would say. One, the same advice I have, and I think they're probably less phonics than experienced investors. But one, again, like they want you to think it's more complicated than it is. Come on in,
Yeah.
the wire's fine. You're smart enough to get through college. You can figure this out. And then importantly, like one of the things I've observed as the parent of kids in the 20s and their friends is people are in a hurry to get to the impact step quickly. And I would remind them that it is not, you have a long lifetime and an arc of making change.
Yep.
And there's a lot of value in getting your passport and skill set stamped at a Goldman, or a CalPERS or a B of A, to bring those skills that then you can bring intelligently to bear on these kind of more impact-oriented questions. Keep that impact orientation, please. Desperately need that. We need more of that in the financial sector. But don't be afraid to spend a couple of years kind of building your kind of hardcore skill set of people who do this well. And then, so think of your career in hops, not just as like, I need to end up at the final destination.
That's a great point. Yep. I definitely felt that coming out of school, wanting to jump right in, but sort of the traditional experience is important. Yeah.
Nice. As somebody who spent 10 years in a standard straight up management consultancy, I gotta say, I learned a lot of really valuable tools that I would not, couldn't have come by any other way.
Yeah. Gotcha. I think the only caution I would put there is make sure, as you said, you got to hold on to that impact piece throughout, because sometimes people forget about it.
That is absolutely the flip side is, having been to business school, it becomes very seductive to just pursue that one thing. And so the real trick is to hold on to that moral compass, keep that destination in mind, view it as a stop and not a destination.
Get the skills. Yeah. Absolutely.
If the train is stopping here, but it is not disembarking here, that would be mine. That would be my advice. Yeah.
I love it. Well, Mike, thanks again. Great to catch up as always. And looking forward to working on these issues with you. This episode has been brought to you by Metis Global Partners. Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.